Welcome to Profits on Purpose, which is a podcast for e-com and CPG founders who are looking to scale their businesses both profitably and purposefully. I'm your host, Nate Littlewood from Future Ready CFO, which is the go-to fractional CFO solution for seven-figure founders who are looking to turn financial chaos and confusion into business clarity and confidence. Anyway, today's guest is Bellamy Grindl, who's the founder of Retailytics and a top retail expert who spent more than 15 years mastering the art and science of inventory planning across Fortune 500 companies like Walmart and high-growth startups like Gilt and Boxed.com. Bellamy has seen what works and what breaks when brands scale from scrappy to sophisticated. Today, she helps e-com and CPG founders navigate the tension that exists between cash flow and growth by building integrated planning systems that connect the finance, marketing, and operations functions within your business. So if you have ever felt like inventory is either your biggest opportunity or perhaps your biggest nightmare, then this is the conversation for you. Bellamy, welcome to the show. It's so great to have you here.
Thank you so much for having me. I'm excited to chat today.
Likewise. Well, listen, I'd like to, get a bit of a sense for your background initially here. You've had a really impressive career journey going from, huge retailers like Walmart and Box.com, and obviously more recently launching your own fractional practice. Can you tell me how and when you kind of realized that founders needed more help than what they currently have in terms of inventory and supply chain planning?
Definitely. So early in my career, I had the opportunity to work for Gilt.com. Back in the day, that was a really fast growth startup, and I had the opportunity to work for them from what I say startup to acquisition and then also to fire sale. So I really saw the evolution of the business and how the planning systems evolved to either meet those needs as the business changed or not. I think that really shaped who I was. And after working for them, I did go to larger companies like Gap and Walmart, but I really liked the hustle of the smaller company. So I worked for a host of startups after that and realized I was doing the exact same thing for every company. How are you going from 0 to 1? Who are you hiring after marketing and finance? You're usually looking at someone in operations, data science, buying, planning, but for smaller companies, they didn't really know how to write that strategy and how to bring people on to help them grow the business strategically. So after I did that for about 3 or 4 startups, realized that I could go out on my own and that's my specialty now.
Very cool. Very cool. So it sounds like there's a fairly common, evolution of these businesses, as you just described, going through a marketing hire and then an operations type hire. Could we maybe take that a couple of steps further? I'd love to understand from your perspective how you see the operations function kind of evolving as you go from, say, a sub-$1 million a year business to, $10 million and beyond.
Right. So within larger companies, when I worked at Gap and Walmart, their entire teams dedicated to this called integrated business planning. So you're looking at really bridging inventory planning, marketing, and finance to make sure you're investing in the right things. And then you're also marketing the things that you have. So within smaller companies, usually this is one person. And then how are they growing the team beyond that? A lot of the companies I work with are founder led and they don't know what they don't know. So being able to show them the path in which they need to take to grow these teams, and it may be a slightly different path depending on what the business product is, what the nature of the business looks like. It's not always necessarily a copy and paste. It really depends on a lot of factors on what they want to focus on first.
Okay, gotcha. So one of the most common problems that I encounter as a fractional CFO, obviously being a little bit more finance and numbers focused, is I would say 90 something percent of the time when I look into a new company's financials and they're, a small team or maybe a solo founder, I can almost guarantee that they're going to have a problem with too much inventory and incredibly high levels of stock coverage. And we can maybe talk a bit later about, how and why that comes about. But for a founder who has found themselves in that situation and they're now struggling with a lack of cash flow and, drowning in this mountain of different SKUs and product, can you help me understand, like, what are some of the tangible ways that someone like you actually works with and supports these people and helps get them out of situations like that?
So I'd say the first thing is definitely looking at what you own. It always surprises me how, no matter the size of the company, there's so much focus on the new, what's coming in. And this is especially true of fashion. They don't actually
Mm,
know what they already have. Comes down to a lack of attribution, a lack of data, a lack of visibility, but they're always focusing on marketing the new, pushing the new, pricing the new, that everything else sort of falls through the cracks. So the most immediate, I guess the easiest impact is look at what you already have. How can you leverage that and move it and work with other teams? So especially I like to work
mhm,
really closely with marketing because let's say you have a hero product, but 80% of your inventory is in your third tier product. How can you actually work with marketing to create a message that leverages that product and changes the shopping behavior?
mhm.
Because I always tell people inventory is just cash sitting in your warehouse. So if your cash conversion cycle is really slow, you're not going to be able to buy new inventory. And you
Hmm.
have to fix the upstream effects in order to move more efficiently.
Hmm. Hmm. So, in your experience, what are some of the most common underlying reasons that founders kind of get themselves into that situation? I mean, you just mentioned a couple of things, which is about, a tendency to focus on the new. But is there more to that? And is there commonly a tools or systems problem that's responsible for this as well?
So I always say that too much inventory is a symptom. You need to fix the root cause, which is the actual planning process. But I
Mm,
do see, especially with growing companies, that it does come down to minimums. If you're working with a
hmm.
vendor and they require you that you have 500 unit minimum, that adds up if you're launching, let's say, 100 new styles per quarter. So
Hmm.
no one's really doing the math to say, okay, if you're actually only moving 10 units a week, how many weeks of coverage does that actually translate to? So I always tell people that you really need to think of your inventory as an investment portfolio. You need to make
Hmm.
sure you're investing in everything that you love. Because I've definitely worked for a lot of fashion companies where they'll launch a product just because they want new product to talk about, but no one
Yeah.
really loves it. And then you'll do a post-mortem or a hindsight and say, why did we launch that? We weren't 100% behind it. So
Hmm.
there's a lot of things that you can build into the process and checks and balances to make sure that you're launching products that the company believes in and
Hmm.
wants to really invest in. So I think the easiest way to look at it is consider it your portfolio and where you're
Mm.
investing your dollars.
That's a really interesting perspective and way to think about that. What are some of the practical ways that a founder or a startup business could actually determine and prove to themselves that this is legitimately a product that they love and that they're excited to be pushing?
So sometimes I think the easiest way to look at newness is, use hindsights and looking at historicals.
Hmm.
So anytime you've done any sort of quarter or annual hindsight, you can look at your sales to stock ratio to see how things are out of whack, were your sales and your inventory percentages aligned, and if not, what can you do to fix it? And
Hmm.
then also look at, um, so I'm speaking a lot to fashion because that's where I have the most experience, but if you are looking at a CPG brand, for example, and you have a hero product that does 90% of your sales, well, that should also align with how much marketing you're doing for that specific segment as well. So I like to look at it as a percentage based across all of those. So inventory, sales, marketing, and
Mm.
those percentages should be roughly aligned with how you're investing in each of those.
Okay. Interesting. Interesting. So, one of the things that you talk a bit about is the breaking down of silos between finance, marketing, and operations. Can you tell me, what that, how that kind of comes to life? Like, what does that look like in practice when you walk into or you find a situation where people are in these separate silos?
Usually, where I like to start is just making sure that everyone is speaking the same language. That comes down to defining KPIs both mathematically and with the same verbiage, because sometimes when the marketing team says sales and maybe a planning team says sales, they may be speaking gross versus net. And even if you're talking to
Mm,
finance and they're saying net, their net may be different than the merchandising net. So I think
mhm,
first and foremost, level the playing field where everyone is literally speaking the same language. All of the numbers match.
mhm,
So therefore you can align. And then implementing a cadence of looking at your historicals and also creating a path forward and being able to move levers. And usually what that looks like is in larger companies, we did this. We basically had a weekly sales review on Monday. How did we do the past week? How did we look at compared to plan? What are the steps that we can take this week to action on if we're either behind plan or ahead of plan, and how we switch it up? I'd say a lot
mhm,
of smaller companies are really hesitant to set a plan because it's always going to change. And I always
mm,
tell people in my coaching that the plan is always going to change. It is really just your best educated guess at a certain point in time and
mm,
what you're doing. And I keep coming back to this portfolio management. How are you making yourself whole again based on what is changing?
mhm,
So speak the same language, have open lines of communication, and then one of the things I see is not checking in with the other team. So if you're
right.
speaking the same language, also having the same data and reports, because you're ultimately all trying to achieve the same goals, just different ways. So
Yeah.
within larger organizations, usually finance will have a tops down plan, marketing will also have a marketing version of bottoms up, and then buying and planning will come with a bottoms up. And those numbers more or less need to triangulate to the same place. And if they're not, then you need to
Mhm,
see where you can pull levers in the business to get
mhm.
there, or at least negotiate between teams on what you can change.
Okay, interesting. So you mentioned a few things there, which was the Monday sales meeting. You mentioned making sure that everyone is talking the same language in terms of definitions and terminology. And you also touched on the kind of finance top down and marketing and operations bottom up approach to forecasting. There are any other elements or aspects of what you would consider a cohesive and well-oiled machine when it comes to, the collaboration of these three different departments and making decisions about supply chain planning?
I'd also say just financial literacy, especially with smaller companies. Some teams don't understand the numbers or they don't understand the
Mm,
definitions of the numbers, but that's really a non negotiable for me. When
hmm.
you're setting goals and especially financial goals, you can't move towards them if you don't know what they are and define them. So,
Right.
understanding where the company is today, setting those benchmarks so everyone understands, okay, this is what we do in an average week. This is the number of units we sell. This is our AUR. This is our average cost. Really setting that so and it's published so everyone understands what those are. So then when you're
Mm,
performing above or below those expectations, it's very clear.
hmm. Okay. Okay. You mentioned the topic of minimums earlier and threw out an example of 500 units, which I get is a reorder point, if you will.
Mhm.
Could you talk a little bit about how you recommend people handle situations where there's huge amounts of seasonality? So, there could be times a year where 500 units represent several months, but maybe other times a year, 500 units only represents a week. So how do you make, repurchase decisions, and what are some of the mathematical approaches to doing that for businesses that have, very high volatility or seasonality?
So one thing I recommend is a lot of brands think that they don't have any negotiating power. But if you're working with your vendor or suppliers, they want to grow with you. And so just making sure that that is also an open line of communication. If you have a key item that you're going to do 20,000 units in the whole year, and you know that, if you tell your vendor partner that, and then that way they can prepare on their side for it, they will be much more flexible in terms of
Hmm.
holding receipts, pushing receipts, breaking receipts up. If you have a 500 unit minimum, they may let you pull only 100 units now and ship the rest later. That
Hmm.
if you're creating those forecasts up front, I've seen vendor partners be much more, they want to partner with you. Again, it's you both have the
Yeah.
same goal to grow together. So if you're
Yeah.
sharing those forecasts, they can work with you more easily.
Mm. Interesting. Interesting. That's a really good approach. I want to talk a little bit about COVID. I know it was a few
Yeah.
years back now, but COVID was a pretty traumatic time for a lot of us who are responsible for or exposed to the ordering and handling and shipping of physical goods. And I'm sure you probably have a very long list of war stories to share, but I'm curious what sorts of changes you might have seen in the industry because you've been at this a few years now. Like, what sort of changes have you seen in the kind of pre-COVID and post-COVID era when it comes to the approaches that brands are taking with respect to, procurement, supply chain, and holding inventory?
I think overall, companies are understanding that in order to improve P&L and bottom line, they understand that inventory is a much more important part of the piece than it used to be. Quite frankly, when I
Mm.
first started in my career, planning was a almost a novel career. And now that
Wow.
there's so much volatility and people understand that if you cut your weeks of supply by say two, how much more that can save you if you don't have inventory liability left over at the end of the season. What does that do? And
Hmm.
so I think there's just a greater respect for the industry, but people are trying or understanding it more. I mean, when I was going to
Mm.
retail conferences a couple years ago, people never talked about inventory, but sort of ever since COVID, people are like, inventory is the main thing you should focus on, especially if you want to
Mm.
improve profitability, because it is, I mean, aside from marketing and people, that's your third biggest line item on your P&L.
Yeah. Yeah. It's curious. I wonder whether there's a relationship there with access to capital and
Oh,
interest rates as
absolutely.
well. Yeah.
Yes.
I
I
guess
mean,
during,
it was a different time then when, and so
yeah,
there was the money and you didn't need to be as careful, but now that the money has scaled back, people are being
yeah,
really strategic about where they're placing their dollars.
yeah, yeah. I hear you. I hear you. So, listen, this episode is, I think, going to be airing in January. Hopefully that's the case when we go to publish it live. So, a lot of people listening to this will have recently finished the holiday period, and hopefully things worked out for them. But I'm guessing that there could be a few people listening right now who maybe didn't have the holiday that they expected in terms of sales. Maybe their Q4 numbers were perhaps a bit weaker than what they had budgeted or expected. I'd love to hear your thoughts on some of the more successful strategies that you've seen, or any advice that you could offer for folks who may be finding themselves in that situation in January 2026.
So I think first of all, have a hindsight either on the past quarter or the whole year to find those areas of opportunity or um, that you know you can improve upon in the next year and make sure it is published somewhere where other people can access it, especially if there is turnover. And
Mm-hmm.
then creating a plan. Like I
Mm-hmm.
alluded to earlier, a lot of smaller companies are hesitant to put numbers to a plan because it's always going to change.
Mm-hmm.
Setting those goals and creating those weekly touch points where you're tracking to those goals, I really think is imperative. And
Mm-hmm.
then lastly, if you are having an inventory problem, don't wait till Q4 to address it. I've seen so many
Mm.
people push off inventory or looking at returns.
Sure.
because those neither of those things are a problem until they are a major problem. So making sure that that is sort of always in the back of your head. Are returns creeping up? Is my inventory level creeping up? Because quite frankly, if you look at the off-price market right now, it is so saturated. So maybe
Hmm.
you could have moved those goods 3 quarters ago, but now you can't. So again, that
Hmm.
cash is just tied up and you can't use it.
Okay. Okay. Gotcha. You mentioned a couple of things there that I just want to circle back to for the sake of clarification. You mentioned the off-price market. I assume that's like discounting, liquidation
Yes.
platforms for selling. Okay. And you also mentioned a hindsight, which I gather is a meeting or review to basically, break down the decision that you made and, kind of analyze what happened. Is there a specific kind of format or template that those meetings should take?
They can be really simple. I sort of look at
Hmm.
those as depending on the maturity of the business. So, one of
Hmm.
the things I mentioned earlier was just looking at your percent of sales to your percent of stock
Hmm.
and maybe your percent of marketing efforts over a quarter or over a year to see if those percentages are aligned.
Yeah.
That's sort of the most basic. You can get very complex with every KPI under the sun, but that's
Uh-huh.
usually where I like to start. And
Yeah.
then off price, just want to add another note on that is everyone thinks they can always sell it off price. If you're, especially if you're in fashion and apparel and not CPG, you will
Hmm.
get pennies on the dollar. So being able to offload
Hmm.
something on your own website will almost always be more profitable, even if you're selling it at
Right.
cost, breaking even, than trying to go
Hmm.
to some of these jobbers or TJ Maxx because usually if it's a dog, bad product, no one wants it. I mean,
Hmm.
you can sometimes barely give it away.
Yeah, interesting. You mentioned selling stuff at the loss and the possibility that folks may be forced to thinking like that. Just for the sake of clarity, could you talk a little bit about the difference between pricing and shall we say retailing and selling on a P&L perspective, i.e. with the goal of being profitable, versus what it might look like for a business to be managing from the perspective of cash flow,
Right.
which I presume could include selling at a P&L loss. Like, how does tell me a little bit about those two different environments, I guess.
So pricing is a whole other ballgame, but making sure that you are pricing your product so you can be profitable. I've seen a lot of companies who are scared to price above potentially where the market is, but if you can prove value and communicate that to the customer, there's definitely opportunity to be higher than the market. But then
Hmm.
also markdown cadence. So if you're moving through products, if you're not achieving the sell through you want, or if it's a seasonal good and you've already passed that season, how are you marking it down in a timely
Hmm.
fashion so you're moving through the products? And then also at the end of season, when I'm saying at a loss, I'm usually speaking to just the product cost. You
Yeah.
can definitely look at it from a contribution margin, which will include all the logistics, how many times it's been handled, warehousing costs, which contribution margin is very hard to look at. Usually I tell people that is an advanced metric of the business of when you're starting to
Okay.
optimize. But for most of the
Right.
companies that I'm working with, that they're not quite there at the looking at the contribution margin yet.
Okay. Okay. Gotcha. I'd love to hear your perspective on kind of software and tools. I mean, it's obviously possible to do a lot of this stuff in spreadsheets, Google Sheets, Excel, or whatever. But there are, of course, far more sophisticated platforms. People might have heard of ERP or enterprise resource planning tools, IMS or inventory management systems. But there's a whole world of these products, and they come with, as you would know better than me, very very wide range of price tags as well. For a brand that's scaling, say, sub $1 million up to 10, are there any kind of common points in that journey where you would recommend sort of certain types of tools or systems or softwares? And if so, kind of what does that evolution look like?
So usually at the most basic, I'm recommending Airtable as an
Hmm.
upgrade to Google Sheets to you can automate a lot of systems in there. and
Mm.
just for data visibility. That way, one person isn't a gatekeeper for it, especially for
Mm.
companies that aren't yet on a PIM, a product information management tool. Where are you housing all that information, like product name, price, cost, average cost, and then anything from an attribution perspective on how you want to track it. So specifically
Mm.
for if it's in what type of category it's in, what type of tags are you want to use reporting against. I recommend that for Airtable. And then
Mm-hmm.
also Parabola is a really great data cleaning tool that
Okay.
I use a lot personally with clients.
Okay.
And then beyond that, there are tons of inventory adjacent, pricing adjacent tools, but they're so vast in terms of what they focus on that I
Yeah.
haven't really found one that I recommend across the board just because they vary so much in cost, what other systems they work well with, and usually it
Yeah.
will come down to budget and playing nice with other systems,
Mm-hmm.
which there are, I mean, there's probably like 30 that I usually look at when I'm making a recommendation for a client.
Interesting. Interesting. That is a long list. I went through this process myself well, actually on a couple of different occasions, and I think we had maybe 12 or 15 in the mix.
Mhm.
And one thing that I really took away from that process was that um, there's really no right answer to the question that I just asked you,
Right.
and that like the right tool depends on your specific situation and what the rest of
Absolutely.
your ecosystem looks like, and what features and functionality is important to you and your business. But I'm curious if there are any common mistakes that you see people making when they're going through the process of trying to figure out their technology solutions.
I
Or
think
put
the
another
biggest
way,
mistake, go ahead.
oh, um, I might just backtrack a little bit there. Um, in fact, no, that doesn't matter. Sorry, go on.
I think the biggest mistake is thinking that technology is going to solve your problem. So, for
Mm,
example, I'm working with a client right now. They know that spreadsheets are not working for us. The teams are doing the best we can in terms to provide the data that the teams need to make effective decisions. But the teams aren't making those decisions properly. And so, even if we implement a system, we'll have better visibility. But unless the
hmm
team is actually taking that feedback and acting on it, technology is not going to fix it. It's just going to
Yeah,
fix the visibility. But I do think
interesting.
visibility is a key one because, especially with growing companies, no one person can be a gatekeeper to a function or a data set. That's where you get hiccups.
hmm
If it's living on someone's computer, in their Dropbox, in their personal file, you need to have visibility and speak the same language across all of your teams. And
mm
that's where I see technology as being the biggest help.
mm Interesting. Interesting. So you mentioned earlier that one of the things you look for is symptoms, but what you're really trying to understand and get to is the underlying cure. I'm curious, as a fractional specialist that works with a number of different brands, how is it that founders tend to be looking for someone like you? Or put another way, like what are the most common problems that you see your clients or prospective clients encountering that kind of lead them to thinking, I need someone like Bellamy?
Yes. So the most common symptom is too much inventory. And then I've
Mm-hmm.
also leaned a little bit more into the education component right now, hiring
Mm,
junior talent that doesn't necessarily have the strategy or understand the framework to set the companies up for growth. So leaning
mm-hmm.
a little bit more into that. But it almost comes down to a little bit of project management to have someone be able to zoom out, look at every function, make sure they're operating in the process as efficiently as possible to move the
Mm-hmm.
strategy forward. And if they're not, how are you fixing those process, communication, and all of that up front and streamlining it
Mm.
so there's no duplicative effort and then making it as efficient as possible.
Got it. Got it. Do you ever say no to clients? Do people come to you with
Yes.
these sort of symptoms and you go, sorry, I can't help you? And if so, like why is that?
The most common reason I say no to a client is because they're not ready.
Okay.
Sometimes either the client isn't ready or the team isn't ready to be
Hmm.
able to hand it off. So that's where I leaned a little bit more into the education to understand the process a little bit better and
Hmm.
do a little bit more advising rather than doing the actual work. So sometimes it comes down to being ready, being able to delegate, and then also just size of the business. So while people hire me most of the time when there's too much inventory, it's also
Yeah.
a function of if something is happening in the business, like they're going into wholesale, they're going on Amazon, or that maybe they're opening their own retail stores, where the inventory just gets a little bit more complex and understanding
Hmm.
that they need it can't be someone's part-time job anymore. It needs to be someone's full-time job to understand because you're not going even if you're
Right.
marketing all day, you need to have the inventory to be able to support the business.
Got it. Got it. And if we're at a point where we're growing our brand and we're looking to build out our operations team, could you tell me what a typical, I guess, operations and supply chain department kind of org chart might look like? Or, put another way, what are the kind of job titles that you might have within this team as you go from, say, one person to maybe four or five?
So within a larger organization, I'd say there's definitely someone that focuses on operations and more logistics.
Hmm.
And that team will be bigger or smaller depending on if you have your owned operations or if you're working with a 3PL, third party logistics provider. And then if you have a large assortment as opposed to, if you have hundreds of thousands of variants versus maybe four if you're in CPG, you'll definitely
Hmm.
have more of a merchandising team that is focused on growing the assortment and where you want to invest those dollars going forward. And then a planning team, which is a little bit more focused on the inventory side of things. Those teams often overlap a lot. So it really depends on the type of business you have and if you have a large assortment or not.
Hmm. Okay. Okay. One topic I wanted to circle back on, we haven't covered this yet, is tariffs, which are obviously a huge issue or challenge for a lot of brands at the moment. What are you recommending people do around the, I guess, tariff threat slash uncertainty that is, plaguing a lot of people in this industry at the moment?
So one of the first things I did with a lot of my clients was just looking at your general pricing architecture. Usually when people and company are pricing products, they're doing it at a point in time and understanding where they sit in the market at that point. Everyone I worked with, we went and looked at the market again to say, have our competitors increased prices? Does this make sense? Did we launch new categories? Does this make sense compared to the other categories? So that was number one. And then I think number two is make sure they are only paying for tariffs on the actual cost of the goods. I had a lot of
Mm,
companies that were working with smaller vendors, and actually research and development and some other line items was actually baked into the cost of the product. And so
hmm.
we worked with the suppliers to take those line items out so we could pay for that separately. And then we're only
Hmm.
paying tariffs on the actual cost of the goods.
Okay, that's a very good tip. So you're not paying tariffs on freight and all the handling fees around it, I guess.
Right.
Cool, cool. Okay. Well, this has been a very, very comprehensive overview of supply chain ops and how to manage all this stuff, and some great wisdom that you've shared here.
Thank you.
I'm curious. I ask all my guests on the show this question, and most of them, in fairness, are founders, and you're, a little bit different and special as a guest on this show. But I'm wondering, as a supply chain person and someone who works across a lot of different brands with many different founders, what are some of your favorite business KPIs and metrics? How often do you like to track them and why?
So one thing I really like to look at is GMROI. So understanding, I mean, this comes down to how much inventory you're holding per margin dollar that you're making. And I sort of call this an advanced KPI because usually with
Hmm.
smaller businesses, this is a little bit painful to look at. And then another thing for larger businesses, or let me back up, businesses that have larger assortment is zero selling. So
Mm-hmm.
if you have it, for example, 100 items on your website and 20% of them they didn't sell last week, why? So that's a
Mm-hmm.
little bit of a harder one to look at because usually you're looking at your sales data. And if there's zero sales, it won't necessarily show up. But if you merge your inventory and your sales data, you'll say you have inventory in this, but there were no sales against it. And that can be a really big indicator of how, website operations, are you surfacing the product in a certain way? There's a whole decision tree that you can go through to say, what's wrong with this product? Is it the title? Is it the image and the assets? Is it the copy? Is it the price? And those are all things you can adjust to say if it will move the product. But even moving it up on the website, if a brand has a lot of choice on their website, what happens if you move it from position number 10 on a collection page to position number 1? And so with brands that are so focused on new, making sure that you're looking at those things that could potentially be falling through the cracks to make sure you're more efficient can go a long way.
Okay. I really like that second metric. It's essentially looking at your dead inventory, the stuff that's sitting on the balance sheet but not moving. You have to forgive me though, I didn't hear the first one. Can you just elaborate or clarify that first metric?
GMROI.
GMROI, which is gross
So you're looking
margin.
at your gross margin return on investment. So you're taking your average inventory divided by the margin dollars you make. And so for every dollar that you're holding, how much money are you making?
Okay. Okay. So it's a little bit like a return on assets where asset is the inventory, basically.
Right.
Cool. Okay. Yeah, that makes sense. Which would be a very interesting number to compare to your financing cost, I guess, especially if your inventory is mostly or entirely debt financed. If you're paying hypothetically, 20-30% interest on the debt that's used to finance inventory, then obviously we need to be making at least 20 or 30% Jim Roy, as you put it, in order to pay for that, pay that interest. And if you're not doing that, then I would have to presume that you're losing money on holding that inventory. Am I thinking about that the right way?
Absolutely.
Yeah. Okay. Cool. That's really good. I like that metric. Where should people go if they would like to learn a little bit more about you? Maybe even they have some questions on, wanting to learn a bit more about what it would be like to work with you, or just wanting to learn what you're up to.
Yes. So most of my information is on my website at retailytics.co. And I also do a lot of thought leadership on LinkedIn where I post tips and tricks. So those are the two best places to get in touch with me.
Awesome. So, Bellamy, you've shared a whole lot of really interesting advice and knowledge and wisdom with us today about operations, supply chain, and how to think a little bit more constructively about the inventory decisions that we make. Where should people go if they would like to learn more about you?
Definitely. So you can find out most about me at my website at retailytics.co, and then also LinkedIn, where I post a lot of thought leadership, and you can get in touch with me directly.
Perfect. Well, thank you again for joining us today on Profits on Purpose. Been a pleasure chatting with you, and thank you for bringing me up to speed on all things inventory and supply chain related. I hope folks have got a lot of value out of this, and by all means, reach out to Bellamy if you have any more questions. Thanks, guys. Bye.
Thank you.